When the qualifiers are satisfied, there is a higher probability that the breakout will continue in the direction, otherwise, it is likely the breakout will reverse. We will start by describing the rules for the reverse break. There are 4 conditions for satisfying the reverse break. Firstly, the close price 1 period ago must be less than the close price 2 periods ago, as shown in the diagram. This can happen above or below the breakout level. The next criteria is, current close must be greater than the breakout level. The third criteria is, the current close must be greater than the close 1 period ago, as shown. Fourth criteria is, the current high must be greater than the current open. On the flip side, we look at the 4 conditions for a downside reverse break. The close price 1 period ago must be greater than the close price 2 periods ago, as shown in the diagram. This can happen above or below the breakout level. The next criteria is, current close must be less than the breakout level. The third criteria is, the current close must be less than the close 1 period ago, as shown. The fourth criteria is, the current low must be less than the current open. You may now be wondering, the rationale behind this qualifier. Market psychology and behavior is extremely important, especially when price exceeds what is perceived to be critical breakout levels. The core idea is, if all the buyers, figuratively speaking, have taken market positions anticipating an upside breakout above the key level, or conversely, sellers have liquidated market positions prior to a downside breakout below a key level, then the logical conclusion is, there remains little force to perpetuate what was then the prevailing trend. In particular, instead of selling the breakout, the market is more likely to rally from that level. Consequently, it is more likely a market will follow through on a downside breakout if the preceding close is an up close. In such a situation, it is more than likely the trading community is positioned to the upside on a short-term basis, and that implies that most traders believe the trend is up, and inclination once a level is broken downside is to dismiss the move. No clearer manifestation of human nature exists than in the collective psyche and actions of the trading community. The open restriction qualifier is important, as it requires the market to demonstrate a follow-through to the bar subsequent to a suspected breakout. It is possible to influence a closing breakout above or below a breakout level to ensure the likelihood of a breakout. However, the next price bars open must confirm the breakout. Important breakout levels are often defined by the indicators, such as the Kumo. The likelihood of price successfully exceeding these levels is often determined by these qualifiers described. Adding the open restriction rules have made a vast difference. It is always possible to influence a closing breakout above a significant level, but to carry forward the momentum to the succeeding bar's open, and then follow through above that open, is important. There are 2 criteria for open restriction qualifier. Firstly, the following bar's open price must be greater than the breakout bar's closing price. Secondly, the high of the following bar must be greater than its open price. For a downside breakout, firstly, the following bar's open price must be less than the breakout bar's closing price. Secondly, the low of the following bar must be below its open price. We have seen the 2 very important qualifiers that can be employed on all breakout strategies. In particular, the Kumo break. You may be wondering why we introduced such strange rules. If you consider the psychology behind breakouts, you would see that a critical component of a successful break is surprise. Without this element of surprise, markets typically recovers back through the key level. For a downside breakout, for example, the up close prior to the breakdown produces a false sense of security among traders. And when market subsequently moves, contrary to the general feeling, there exists sufficient forces to perpetuate a move downside. Similarly, this idea applies to upside breakouts. Now that you understand breakout qualifiers, let's move on to numerous other topics from streetpeeps.com.